What's going on, YouTube fam? This is the Wealth Investing Network. We do this for the win. You're getting a sneak peek into my stock portfolio and a sneak peek into my research on stocks. Today, we are talking about Cloudera versus Snowflake. Before we get into it, there's a few things I have to ask you to do, and that of course is to please hit that like button, turn it blue, comment if you value this content, and hit that subscribe if you haven't already for that YouTube AI. This isn't the type of video where I'm going to teach you everything you need to know about these stocks. I've done a lot of videos about data stocks, and I have a video about Cloudera that you can check out in the cards or description. If you're unfamiliar, feel free to pause this video, get caught up, and come right back because we're going to move quickly here. Jumping into Robinhood, you can see from their 5-year chart that they launched on the stock market in spring of 2017, and they're still not back up at their IPO price yet, and not even close to their all-time highs. So this company's been around for over 10 years, and they had some bumps in the road after they launched on the stock market, but they made a commitment to turning their business around. They've got improvements in their fundamentals and a lot of improvements in their tools. We're comparing them to Snowflake, but they're actually different than Snowflake, which is another cloud data warehouse. There's some overlapping functionalities between the two. But what you need to know is that they have a hybrid between on-premises solutions and cloud solutions. With a name like Cloudera, you might think that they're everything cloud, but that's actually Snowflake. Snowflake is 100% with the cloud. From what I can tell, Cloudera is kind of moving away from their legacy business of having on-premises offerings for their data platform, and now they're pushing their new hybrid private cloud and public cloud offerings, which is a higher margin business. And we've seen some businesses do this in 2020. A name that comes to mind is IBM. Companies need to adapt to fast-changing environments. And that's one of the reasons why Snowflake was created in the first place. It seems that things are moving towards the cloud, and that's where Snowflake has the advantage. And for Cloudera, this is a billion-dollar business. It's hard to turn a ship around. It takes time, but they're doing it. And it's just now starting to show in their stock price. And as an investor, I'm long this stock, and that's something I like to see. A couple of other things I like to see as an investor is a share repurchase program, which makes the company more fundamentally attractive to investors, and they're also expected to exceed expectations. I've mentioned before that Snowflake is backed by Warren Buffett, so they have investor confidence on lock. I mean, they were able to raise almost $4 billion at $120 per share. The stock price more than doubled, but they are growing, and people who actually use the software love it because their platform breaks down a company's data silos and puts all that information into a central cloud-based platform that's easy for analysis. I've said before, we're in the information age, and companies have a bunch of data and they want to figure out how to act on it. And Snowflake is one of those companies that makes their life easy. Snowflake also integrates well with other software like AWS, Google's Cloud, and Microsoft's Azure. Snowflake is adding new customers at a rapid clip. It's better monetizing its existing users. There are some risks here with the high valuation, but the main one that I'm looking at right now in the short term is just the lockup periods expiring. So insiders who bought in very early, before most investors could even get into this stock, well, some of them were allowed to sell in mid-December and more will be allowed to sell in March. So that's something to keep in mind. Usually it doesn't change the stock more than a few percentage points, but if you would consider this a momentum stock, downward momentum could be really bad. So if you've seen the channel before, you know I like to jump into my quick analysis of these stocks. It's based on rough estimates, and these are subject to change pretty quickly, especially if there's volatility. But here are the stock prices, the market caps. Neither of these companies are producing earnings, so their PE ratios or price to earnings ratios are negative. The price to sales ratio represents the multiple that you pay for the stock, and that's based on the revenue. Cloudera actually has a lot more revenue than Snowflake, but with all the advantages with Snowflake, people are paying a multiple. This plus 175 multiple in the price to sales means that for every dollar of sales this company has, investors are paying a huge multiple for their market cap. But jumping down to revenue growth, this company more than doubled. You pay a multiple for growth, but you want that number to be a lot lower. I mean, at least double digits. I mean, I mentioned that Warren Buffett got in on this, and I'm sure he got in at a much lower price to sales ratio. Like I said, the IPO price was about 120. I'm not sure exactly where early investors got in, but I bet Warren Buffett's team was telling him that this is a screaming buy because they pretty much have no debt. And their current ratio is sitting around 9, which means that they are overweight with assets. I think they have $5 billion in cash. This is not typical for the stocks that we normally see. Usually current ratios are somewhere between 1 and 2. This is your assets over liabilities. If you're under 1, that means you have more liabilities than assets, which means you probably have more debt than cash. So what I'm saying is that Snowflake has options galore. Usually I'd be pounding the table that a highly valued stock like this is very risky. And let me remind you, I'm not a financial advisor, and this is not financial advice. If you're here to watch my journey, that's great, because these videos are for information and entertainment, and I can only go based off of rough estimates. Even the analysts don't expect Snowflake to reach profitability until 2025, but with $5 billion in cash and no debt, that changes the game. Snowflake could basically acquire a profitable business if they wanted to, in cash or stock or both, and that would change anything that they're projected to do. I mean, what if they acquired a business that brings in millions of dollars of revenue? This whole thing changes. And that's why I think people are so excited about the stock and will overpay on the current valuation. This estimate for Cloudera for being profitable in about 2023 is a little more solid, I would say. They're expecting revenue growth of about 10% compared to Snowflake's 90%. And you can see their analysts target mean prices here. Mean just stands for average. Some analysts think higher, some analysts think lower. And it's a little tough to tell with these businesses because investors could decide, hey, Cloudera has turned it around, and you know what? They get to trade at a higher multiple. Maybe they get to trade at a multiple closer to one of their competitors like Splunk, let's say, which trades in the low teens in terms of price to sales. But in terms of finding a stock that's trading at a discount, Cloudera might be your pick here. And when we talk about Snowflake, there's so much volatility. Even as I'm making this stock price is going down. And that's just the typical volatility for this stock. You could wake up and see billions knocked off of the market cap. So I want to see what happens to the company this year. What is the price action like after earnings or after this lockup period ends? Because for Snowflake, the numbers are already pretty solid. And if they can double their revenue next year to over $1 billion, they'll pretty much pass Cloudera unless Cloudera exceeds expectations, which is also possible because they are turning around their business. And maybe they could change this net income margin. So for me right now, and with my investing style, as a long-term investor, I think there's going to be some more stability from Cloudera, and they could double if they reach their all-time highs. Snowflake is a great company that I want to invest in, but I'm waiting. But let me know what you think. Are you invested in these companies? What do you think their 2021 is going to look like? Go ahead and drop a comment. While you're there, don't forget to make sure you've liked and subscribed because it really helps the channel grow and that helps me provide better content for you. That's a win-win, and we like that here at the Wealth Investing Network. I'm not on social media, but you can send me an email at TheWealthInvestingNetwork@gmail.com. Check out the links in the description for other videos. Also, links to get free stocks on Robinhood and Webull. After you do your own research, of course, always with stocks, do your own research. But that's going to wrap this video up. I hope you enjoyed the content. Thanks for watching. I'm going to go make a snowman. See you in the next video.